live from our studio in Atlanta, Georgia. This is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Everybody, welcome back to another live stream and another week in the markets. This week, a little bit lighter than last week, but still some key things coming on our radar here this morning. I am joined, as always, by the reporter, James. What's going on, man?
Hey, nothing much is going on. How you doing today, Nick?
I'm good. So, James, last week obviously was like super busy. We had, inflation numbers, Fed stuff. What are we looking at this week? Do we have anything noteworthy?
Yes, a couple things that are noteworthy, but not as much as last week. Last week we had a great run on Tuesday, Wednesday, and Thursday. Just absolutely crazy, hectic news, action-packed days. This week, not so much. Wednesday, we do get CPI numbers here in the UK, and Jerome Powell, the chair of the Federal Reserve, will be testifying both Wednesday and Thursday. That's not testify in the sense that he's done something wrong, more so just that's just kind of the term that they use when he gets up and he addresses and holds a press conference. So this will be a two-day event where, depending on what he has to say, we should get perhaps a little bit of volatility as well as an idea of kind of their next steps towards the future of monetary policy. We also have the UK's monetary policy statement, their new interest rate statement here, forecasted to raise 25 basis points up to 4.75%. That'll be happening on Thursday. And Friday, we have our PMI day where the Euro area, the UK, and the US release their flash manufacturing and flash service PMI numbers. So Friday will probably be the biggest news day of the week.
Right. Yeah. And definitely, of course, the one other thing, too, is, of course, unemployment claims, which have been actually pretty meaningful. The last few, weeks, especially as the Fed is looking to see that jobs market continues to show signs of cooling. Again, for those of you who are newer to fundamentals, which we do talk heavily on these streams, unemployment claims, the Fed kind of wants jobs to slow down a bit, as jobs are the biggest contributor to inflation, right? If more people have jobs, more people are buying cars and houses and spending more money than they would had they been losing jobs, or jobs be less, as well as, of course, job growth in the sense of average salaries going up as well. These things cause levels of inflation. So we'll also have to keep eyes on Thursday. Sometimes this is a big deal, sometimes it's not, but we'll just keep an eye open for all of this. And of course, we will be back throughout the week with that. And James, before you go, we are doing something special today. Tell people about we're doing the gold.
Yeah, so we last week we did a surprise giveaway on stream, and y'all went crazy for it. Y'all loved it. We gave away a access to the VIP Gold Discord membership, where you can see trade alerts and chat rooms and all other all sorts of other useful educational material over there in the Discord. So we're going to do that, and again, and here's how you have to enter, okay? Because we had a little bit of a problem with this last time. We are going to send a link in the YouTube chat. There it is right there. You click that link in the YouTube chat and you send us the message giveaway. Do not send giveaway in the YouTube chat. Use that link that we just sent and send us the word giveaway. And I have the wheel actually right over here in the corner. Fresh wheel. It's totally cleaned off, no names on it. I've got my markers right here. I'm going to be adding people's names at.
We lost James for a second. Sorry about that. I'm sure he'll be back in just a moment. He might have disconnected something on his computer. He's back. He's coming back. I think he might have disconnected something. James, are you there?
I did. Let's see. Can you hear me?
Yeah, no worries,
Okay.
James. While you figure that
Wait,
out,
there we go.
oh, you're back. You're back. All right.
All right, now I'm using. Yes, I did. I unplugged my camera and stuff. So, all right. So the wheel behind me over there, I'm going to be adding names at random. Send the word giveaway to that link that we sent in the chat. Do not send it in the YouTube chat. The link that we sent in the chat, click on that, send us the word giveaway. I'm going to start adding names to the wheel, and then I will be back at some point later on in the stream. So you have to stick around. You have to stick around if you want to be the winner, because I'm going to come back at some point later on in the stream here and spin the wheel with you live and announce a winner. So I'm going to go ahead and get started writing names down. Send us the word giveaway with that link that we sent in the chat, and good luck to the winner.
There you go. Luca Fox in the chat. James, we'll see you back in just a minute. Thanks for that. We'll keep James in the back burner, and we'll come back to him with the giveaway stuff in a moment. Luca Fox in the chat. I see that you signed up for access. Luca, if you would just message Drew, he's coming into the office right now. He should be in about now. So if you're not already, just send him a message. He'll help you out. Yeah. There's no issues. It's just that we had the weekend and it was a holiday weekend or Father's Day weekend here in the US. So he may have just been a little bit. So just message him to take there. Let's take a look, guys. We've got some stuff to talk about. Again, you guys are all entering the gold VIP membership giveaway, which is awesome. Thanks to James for helping us out with that. He is the man. He's the giveaway man. So he's the reporter man. He's the giveaway man. He does all sorts of stuff. So thanks to James. All right, let's take a look at the markets, guys. We are now in officially a new week, and I wanted to start with the dollar. Of course, the dollar, the most heavily traded instrument on the planet. And, due to the dollar being the global reserve currency, it's been an interesting thing recently to watch it fall. And, the dollar, if you take a look at the daily chart for a moment, you could see it really had a quick push to the upside here recently, made its way up to 104.5, topped out, and has now been kind of in a downward trend. And I think that this, to be honest, has more room to go down. We saw in 2022 the rise of the dollar big time with Fed interest rates going higher and higher. Well, it does seem like we are on sort of the back end of that. We're seeing the Fed see some numbers that it likes, right? Inflation core has been sticky, but headline inflation is on the decline, and core is expected to start or continue to come down. And so I think that this takes away some of the steam to the dollar bulls. I've been vocal about this. I've been very dollar bearish, and with the recent break to the downside, I think a move back higher this week could be an excellent opportunity, in my opinion, to be short the dollar. What am I looking to trade it against? Well, possibly some currency pairs. But for me personally, what I'm watching and still watching is gold. And we will take a look at gold in just a moment. You guys, if you watch this channel, you know I love trading gold. It is one of my top traded things. I also do like trading the indices as well. But in terms of the dollar here, if you're going to be trading gold, you got to watch the dollar. And the dollar here finding support around 102, I think has room to pull back into an area like 102.7, which is a key level of past support that could turn resistance, right? Really simple technical analysis here, but also keying in on the fundamentals, which have shown inflation is cooling. Fed funds rate is, according to the Fed, they think it's going to go up a little bit further, but the market does not think so. The market thinks that we may see one more rate hike, and then it kind of thinks we're going to roll over and see pauses and cuts from there. So yeah, that is my outlook on the dollar is pretty bearish. So I'm looking at this. I'm saying 102.7, in my opinion, could be an opportunity to sell. If you're looking at the Euro USD, of course, we'd flip that around. That'd be an opportunity to buy if you're bullish Euro. Of course, now this is my opinion. I should say this very lightly. When I talk about these setups, I'm not telling you, hey, you should go be doing this. I'm telling you my opinion. And, trust me, there are times when I'm right and there are times when I'm wrong. If you're looking for anybody who's right all the time, you will certainly be disappointed to realize that no one is all the time correct. So when I talk about an idea here on YouTube, these are ideas. These are concepts that I may put my own money on, but I'm not encouraging anybody else to do that, right? You really should do your own due diligence, your own homework as to why you may or may not take a trade. As always, we talk about this often on the channel because we're not here to encourage copying. We're here to encourage real trading, and real trading involves learning a lot and taking responsibility for whatever you're doing. So anyways, I want to talk about this Euro idea. I like the Euro on the upside. If I'm talking about a pullback here, I'm looking at areas like 1.086 as a possible area for long side continuation. Now, again, this is a 4-hour chart, so I'd have to lower the time frame, take a closer look. But I think that this has more upside. And I'll show you some of the stuff behind this. You'll see that the Euro USD doesn't really have a rating here on the EDGEFINDER, but from a fundamental perspective, I want to show you a few things. Let's take a look at the central bank forecasts. And we'll go here into this. We'll take a look at, I want to show comparatively speaking, the European Central Bank, the ECB, compared to the US Central Bank or the Federal Reserve. So first, let's take a look at the Federal Reserve, okay? The expectations here are for rates to stay for a little bit. And as mentioned, they're expected to go up one more time, pause, and eventually come down, okay? Keep that in mind. Save that in your mind. So that's the forecast for the US. Look at Europe. Europe expected to stay at current levels for a long period of time, right? Throughout 2024. Right now, that's the expectations. Those are the forecasts, right? Those can change. But what that leaves us with is a central bank that is more hawkish versus a central bank that is softer. We're talking, of course, about when we look at EU. Remember that a tightening central bank, a hawkish central bank, generally causes the currency to rise in value, like the dollar in 2022. In this case, we see the story flipped. We see Europe expecting to raise rates, expecting to remain pretty hawkish, and we expect the US to sort of soften. Okay, this leaves us a divergence. The Euro USD, in my opinion here, if this trend is going to continue, actually looks bullish, right? So as we pull back, I'm looking at this as kind of a buying opportunity. So that's my take on it. Now, of course, we want to talk about gold, which is one that I talk about very often on the channel. It is something that I trade very frequently. And gold, again, I've been talking about this for several weeks now. You probably know where I'm going with this if you've been watching. This level of resistance yet again has been being rejected. And this is like the 1, 2, 3, 4, 5, like 5th, 6th time that we're seeing rejection from gold sellers around the 1970, 1965 zone, right? Sellers are holding tight to this area. All that to say, if this level begins to break out, it could offer a huge new level for buyers. So what I mean by that is that if this level were to see a significant breakout to the upside, any sorts of pullbacks into this zone could be very bullish opportunities. Okay. So I am bullish on gold, and I'll show you why that is in just a moment. Again, I think the Fed, part of the big one is the Federal Reserve is expected to sort of go a little bit further than pause and eventually cut. Those are atmospheres in which I think gold could do quite well. On top of that, let's take a look at the gold reading here from the EDGEFINDER. EDGEFINDER has gold as a buy, short-term targets at 1970. And very cool stuff here, because if you take a look at gold, we get a buy rating. And I want to pull up the gold market specifically for a moment to take a look at this. By the way, guys, if you're enjoying the stream, do me a quick favor and hit that thumbs up button. It helps to get more viewers in here, helps out with the YouTube algorithm. And I want to talk gold here for just a moment. So gold plus 4 score, COT data shows institutional money is very long gold. Retail sentiment is pretty mixed. We're at 59.41. So usually what happens is this is when it comes to retail sentiment, the way we look at stuff is if there's an extreme one way or the other, 60 or 40% are our thresholds. For example, if retail is 60% plus short, we view that as a bullish signal. And if retail is 40% or lower short, it would be a bullish signal, right? Or, I'm sorry, I'm getting those mixed up. Essentially 60-40, and whichever one is the dominant, we are going the other direction. We use retail sentiment as a contrarian indicator. And so for those of you guys who are interested in seasonality, I'll just show you this real quick. So we could take a look at this. I'm sorry, this is seasonal trends. Let's go to retail sentiment. So if we're taking a look at retail sentiment, for example, we look at like dollar CAD. Dollar CAD has a 93% long ratio from retail traders. So that's actually a very short biased indicator for us because, again, retail is buying this market and has been buying this market. So they're expecting this thing to rise, and yet we continue to trend lower. Okay. So we're looking actually as this has a 93% long ratio. We view that as a bearish signal. Whenever there's an extreme like this, we're generally contrarian from retail traders. Not the case when we talk about smart money. When we talk about COT data, we view this as a confluence factor. So for example, if you're looking at the gold market, which is very heavily long by institutional traders, we view that as a bullish signal because this is the professional money. The professional money is buying gold. Okay, we're bullish on it, right? So that's the idea. However, we'll get more into gold in just a moment. They had some decreases in long, some increases in shorts. We'll bring in Frank in a moment for that. But before we do, we're going to just take a quick break to hear from one of our sponsors, 8cap, which makes these streams possible. Right after this, we're going to talk gold in terms of COT data, big money, and what they're doing. So don't go anywhere. And we've got our giveaway. So lots of stuff coming. We're going to take a quick break and we'll be right back after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we are back after that quick break. We're back with Frank. Hey, Frank, how's it going?
Good morning. How's it going?
Good. So, Frank, I wanted to, we do this every week. We could take a look at the COT reports together. COT data, anything catching your eye? Obviously, we've got to talk about gold here. Anything, what's your take on COT today?
Gold looks a lot less bullish than last week. So there was some mixed sentiment going into last week, and now this past Friday really kind of cemented it. Definitely a change in smart money sentiment overall. It's still net bullish, which is something to consider, but considering that they declined by this much, they took away a lot of their long positions and at the same time increased the number of shorts. Just not as long or as bullish as it looked before. And so I think price is going to struggle at that trend line. I'm not too sure if it's going to be able to hold up on that long term. But, I still would like to see some confirmation price action wise. So if price can break under, then I'd probably flip switches as a result. But right now, gold still looks like it has that potential to move higher. And COT has been kind of back and forth, so it can flip again. But if we continue to see the smart money making moves to the downside, I feel like price is probably likely to follow below that trend line and stay underneath.
Yeah, and of course, you're talking about the trend line off the higher time frames, that daily chart that we've talked about. I'll get that drawn just so we can see it. And yeah, I mean, Frank, that's the thing with COT data showing some decline in long positions, as you mentioned, and some increases in shorts. It's really, to me, I think it comes back down to the concept that we've been talking about, is this longer term trend line and whether or not bulls can hold this area. I think, this really helps us if we take a look at, like you mentioned, price action. If I look at like the 4-hour chart, it seems like we're ping-ponging back and forth between, and again, I mean, we saw the rejection yet again. Markets opened up this week and we saw the rejection at 1965. This is a 4-hour chart, and you can see this area has been consistently holding for sellers. We've had, to the bulls' credit though, some very strong movements trading around the 1940, 1935 zone. We saw huge demand as well. So for me, looking at the gold market, And we'll have to see. Like I said, Frank, you've got that trend line on the longer time frame. If we can get the breakout here, I think that probably indicates that perhaps COT data next week, once it comes out, will show big buying again. But it's really just stuck in this range here. And again, this is like the third or fourth week that we've talked about this range on on stream. So I'm really seeing or waiting to see if we can get a breakout. I personally do want to be long gold, but I've really got to see this thing break to the upside. And to your point, if that trend line breaks and perhaps on a 4-hour chart, we get something like a 1940 or 1930 break, I think for me, that would probably mean abandoning the trade for a little bit until later on. What do you think? Would you agree?
I agree. And now, before I was talking about the longer time frames, but now I'm agreeing with you on the shorter time frames because of last week's price action. Gold didn't go where I really wanted it to. It had a really nice day on Thursday, that giant green candle, but could not maintain enough buying pressure. So yeah, on the 4-hour, it's got to break that higher high. It's got to at least touch the 1970s and close above that for me to feel comfortable about buying again. But yeah, I think less bullish overall.
Yeah, I think it's just such a choppy market, and watching for those breakouts will be key going into this week. And then, Frank, what's the latest? I was pulling up the COT data as well, just to see what was going on with some other things. And we had a big decrease in longs on gold. We can actually sort by this. We can be intelligent about it. Let's see if there was anything increase in long. 10-year got a bid, but not really much percentage wise, just because so many contracts traded. Oil got a slight. That's not very significant either. What is very interesting, Frank, is the pound had a huge increase in longs, but also a big increase in shorts. What does that tell you?
Well, there's kind of like a lot of that happening right now. So I can't really get a clear read on anything other than the only thing that's clear to me is the stock market.
Oh, wow. I was just going to ask you about this. Look at this. Now, Frank, this is what we were talking about. Last week, we made this point. We talked about the unwinding trade that could be going on. And right now, take a look at this, guys. We're looking at SPX. This is, of course, the S&P 500. Frank and I both watch this market very closely. And what we can see here is that under the change in short contracts, now these are futures contracts, and we had a slight increase in longs, 1,700, but a humongous decrease in short positions, down by 18,268 contracts. We're still very net short from institutional money, but that number has decreased, hasn't it, Frank?
So we're seeing sort of a shift towards more of the bullish side. I think it was 1 or 2 weeks ago, it was probably like low 20% long overall. So seeing an almost 10% increase is pretty promising. And plus it looks like the trend is continuing to this week. So, kind of promising for stocks.
Yeah, and let's go take a quick look at just the S&P 500 for a moment. I know NASDAQ also maybe one we should check out, but I think that, from price action standpoint, the S&P just looks so strong. Here is a 4-hour view. You can see just a lot of green on this screen, right? Big breakouts, pushes higher, pullbacks are getting bought up very quickly. Are you a buyer this week, Frank? If we get a bigger discount on the S&P, are you looking to buy it, or are you looking for a deeper retracement before any interest?
Well, if you pull up the daily, I'll show you what I'm thinking on both S&P and NAS. If you scroll out, I have this channel drawn.
We could take a look at your screen.
Yeah, I think that might be easier because I'm not really sure what price I started at. But so I'm looking at this, how price didn't really break above or close above. It had its chance and then came back underneath. So honestly, we're not going to really see anything today because the market's closed. But what would be ideal is maybe a pullback to this level, which would be highs of 2022 in August. So some big level of demand right there. The same thing for NAS, which came up to test 15K, which was, what was that? March, April highs of 2022. So it came up and hit those levels and then pulled all the way back. It looks, I mean, to me, it looks very bullish, but obviously there was such a huge run to the upside and it's broken all the levels to where I was feeling more cautious, and now we're like officially in bear or bull market territory. So um, hopefully we get a decent pullback in an otherwise healthy uptrend. And so I'd be looking to buy it at levels like back in the 14,000s on NAS, and then for the S&P, I'm not sure what price it was, but I have it written out. Probably like the 4,300s. So something. Who knows if it'll go that far, but
Yeah.
somewhere along those lines.
No, that's a good update on the indices. Of course, for those of you guys who are watching the streams, we have all sorts of different markets that we talk about. We hover between currency pairs. We talk about gold. We talk about indices. Some of you guys have some requests, but if you guys could just real quick, if you have chart requests for Frank and I to take a look at, drop them real quick. We're gonna have Frank on for just a few more minutes, so we'll give you guys just a chance to ask your thing. Yeah, Stim Investing says Frank is always chill and calm, and Nick is more hype. These two are a nice duo. Thank you for the nice comment, and that is facts. Frank and I have been the dynamic duo for a very long time now, and Frank's always the chill friend, and I'm always the overly hype or overly ecstatic dude. So it makes for a nice touch. So Frank, you balance it out very nicely here.
Each other out, yeah.
Okay, so we have some requests. We have Euro USD, Pound USD, CAD CHF, CAD JPY. Frank, I'll let you take the pick. Do you have a preference of any currency pair that you want to talk about?
I do kind of want to talk about the RBA, so maybe Aussie.
Okay. Yeah, we got Aussie dollar in the chat as well.
There aren't any Aussie pairs really I'm looking at. Maybe Aussie Swiss, just because they have, they have a what's it called, a rate statement this week, and then RBA is going to talk about their statement as well. I think it's today. So we're going to get some kind of idea of what they're going to do going forward. Yeah, Aussie Swiss. I think honestly, so Australia has really high inflation. It's very out of control, but they've reached levels to where they're worried about slowing the economy. They've had shrinking economic numbers. Same thing for New Zealand. Meanwhile, Swiss is forecasting another 25 basis point hike. So maybe some bearishness on this pair, but the way it looks, maybe it'll come up and test this level up here at the trend line. So not really sure yet. Have to look into it more. But I was looking at news and obviously the hawkish Swiss, and then probably a more dovish Aussie dollar and New Zealand dollar after this latest hike. So
yeah, definitely could be interesting to watch some of the Aussie pairs going into this week, especially. And the Australian dollar caught a really big bid too, Frank. And we talked about indices just a moment ago. The Australian dollar caught a huge bid with those things. As some of you guys may know, the Aussie generally falls under the camp of risk on, meaning people buy this currency, investors move money into this currency, into Australian bonds, Australian stocks, the Australian currency. They tend to buy it when things are optimistic in the world. And recently we've seen the S&P, we've seen the NASDAQ, you've seen the Nikkei, right? Stock markets around the world as an indicator of risk on have shown a huge buy side preference. Well, Australia got a little bit of a bid for their currency alongside that. And so if you think that may be a little bit overdone, Frank's talking about, Aussie Swiss perhaps has run its course a little bit here and maybe due for a bigger, longer term push to the downside. It's an interesting pair to watch out for. So Frank, thank you for coming on the show as always. And again, we have a nice little segment with you each week where we take a look at COT data. So I'm sure a lot of people appreciated you coming on today. So thank you as always, and we'll see you back next time.
Yep. Thank you.
All right, guys. So we are going to be moving here in just a moment. We're going to bring in Ivan here in just a second. I do want to take a quick moment to remind you guys, we are doing a giveaway today. We're doing a gold VIP membership, which gets you access to a bunch of cool things. Again, it's free to join. All you have to do to enter, we're going to be dropping a link in the YouTube chat. Click that link and message in to our support staff here at A1 Trading. Click this link. That will enter you into the giveaway. Again, it gets you access to the trade alerts. It gets you access to our chat rooms, our coaching webinars, our educational material. We have so much value in here. And if you're an aspiring trader, if you're looking to learn from people who are out here really doing it, who have been doing it for a number of years, this is the place to be. So if you guys are already entered into the giveaway, click this link right here, message us right now, and you can join for free for a chance to win. We have people, real people, not robots, but real people on our live chat who will get you into the giveaway, or we'll get some of you guys into the giveaway. We're writing names on the board. So as you message in, we're going to be putting a couple select names on the board. So if your name ends up being on the board, you have a pretty good solid chance of winning. I think it's 118. So message in now if you want a chance. All right. So now we're going to bring in the one and only. We're going to bring in Ivan. What's going on, Ivan? Welcome back to the show. Good to have you back.
Thank you very much.
So, Ivan, you were stuck in Dubai, right? What happened to you?
It was actually Doha, so the other country. By the way, I forgot my microphone. So if this works, this is a whole new microphone. I don't know if it works, but I had a short connection, and I got 10 minutes to the gate. I already closed it, so I was there for 24 hours.
Oh my goodness, that's a nightmare. So you were stuck in Dubai on your way to Norway, correct?
Yes, correct. I was stuck in Doha. It's a different country. So
okay.
But I was given a hotel and I was given food. I tried kimchi and dumplings for the first time. So I had prawns tempura. So I wasn't having too bad time, to be honest.
You made the most out of it. That's good news. Yeah, that's
Had a
awesome.
food voucher.
So I have a new week in the markets. Last week was super, super hectic. We had a million news reports and so many different things. We had inflation numbers, Fed meeting. I'd love to just see where you're at. What are you looking at this week? And I guess what was your summary of what happened last week? Where are you at with things after all of that we saw last week?
This is the most unprepared I've ever been. I was actually flying. So I was flying from Wednesday evening when the Fed meeting happened, and then I landed here on Saturday. So I was just seeing the news reports, which was they are expecting more interest rates to come. So my summary is like the market is disagreeing with Fed. So I guess I'm just gonna go with what the market thinks so far until the Fed forces us to believe in them, kind of a thing. Because if you look at the market reaction, they think that the peak is here,
right?
Based upon the market reaction, and then that's the direction we're probably gonna go anyways.
Yeah, it was an interesting take on it. I think that a lot of traders and investors essentially thought that Jerome Powell and the Fed committee are kind of bluffing, right? They're saying we see more, we need to do more in an effort to stay on the cautious side of things, where a lot of people are seeing core inflation is starting to crack. And again, that core CPI is what the hawks or the bears in the market are really just clinging on to. And if that starts to crack, I think, dollar weakness is here to stick around. And I think that the indices could fly higher. But I think last week, the market really got optimistic, like to a point that is almost concerning. I would say I'm still bullish on indices. I have been for a while, sort of looking for that topping in the Fed funds rate and projections and that sort of thing. But my take on it personally is that I'm still bullish, but I've got to see pullbacks and I've got to be cautious because, again, the Fed very well could surprise us. Again, earlier this year, there were forecasts for possible rate cuts. There were, hopes for that, and that sort of has been ruled out. And so there is upside, I think, but I don't want to be caught holding the bag, chasing the tops of these markets in terms of active trading. What do you think on the dollar? Do you have any charts or trades that you're looking at yourself?
I just want to say to everyone here, when you're talking about cognitive dissonance between the market and the Fed, one day when the market does agree or starts to agree with the Fed, is going to be a large movement in a direction, dollar bullish. That might cut you off guard. That has happened in the past. I've seen in Discord that people are like, "Oh, it's going to happen in dollar," because of a news event that in itself is innocent. I'm just mentioning that so that's you. So if you do choose to sell dollar, use proper risk management. My kind of deal with the dollar at the moment is it didn't go down what I wanted it to go down, and now it is down. I'm like, I've given up on it, to be honest, a bit. I see it as dead at this point. Well, still bearish technically, but I don't expect it to continue to fall due to people now going on vacation and going into July. It can probably still trend, but I'm not expecting more than 100 pips max move or 100 pip range until give or take August. I might be wrong, but right now I feel like the fun is over.
Fair enough. Yeah. So I mean, dollar has dropped pretty substantially, and I'm kind of in the same boat. I'm still bearish, but I just don't think that selling it outright after all of that volatility last week. I think waiting for pullbacks is probably the more cautious approach that I like myself. So I guess Euro USD. What do you think on this one? Euro dollar, is it a buy in these areas? Is it a sell in these areas? Or where would interest start to come back in for you?
Oh, if you're looking at your dollar bullishness, 100% 107.40 was a clear, and I didn't take it. I'm gonna say that I did, but that's a clear option to buy, and then a new higher high and higher low again, support and resistance, continuation of trend, whatever you are following. And now that we rose so fast up to 109, almost 109.50, and we either have to come down to 108.50, which is a very deep pullback. So the only thing that is absolutely certain now is another high, low. Because if we start dropping back down again, that is at least a short-term peak. So I see increased risk if it starts dropping now. So everyone would say 108.50, this one, but if that happens, it's a no-go zone.
I mean, yeah, to your point about the deep retracement need, you're talking about a really big move that we had there, where you've got that gray zone where it jumped recently. This move here, I mean, that's 80 pips at the end, sort of not the end, but at the most recent push of this trend. So you have to be cautious with this stuff because, of course, uptrends are great, but there comes a point where when you get these explosive moves, oftentimes it does mark sort of a short-term high. So do I think the euro is bullish compared to the dollar? I personally would say yes. But to Ivan's point, if it does come crashing down very quickly, you have to be very careful that this thing doesn't just break and start trending back the other direction. I would say, if it does come down to this area, for me, I would look for some signs of strength, some signs of, wicks on the bottom kind of approach before any attempt to go long on euro. What about pound? Of course, pound and euro tend to move in correlation to one another. But what do you think about the pound? Any differences or very similar?
I haven't seen it yet, but there's clear differences in inflation, and you would expect pound to be more stronger than euro. And when I look at this chart, we're going up. We went up from 123 to 128. That's a very strong move in give or take 2 weeks. That can still continue rising, but right now it's uncatchable. It's on fire, and if you try to buy it, like Trevor Jin asking about Swiss yen. It's too high. It went. It let it do what it does, and this local support is not the support it's going to use. So it's too random at this point because the buy was a long time ago, and that's the only thing certain. And then now it's more random as to what is going to happen next. So either very deep retracement or a new higher high, higher low, and you take a small scalp, but still very risky.
Yeah, speaking of Swiss yen, I know Frank was trading that one, and I'll see if I could pull up his thing where he's at. So Frank, to your point, Ivan, the buy, when you get these really big pushes, I think what it does is a lot of traders, undeniably, FOMO becomes a real thing for a lot of traders. They see something trending like this, and they're like, "Oh my gosh, I want to be a part of this." And when it's good, it's great, right? When it moves like this and you're in it, but to Ivan's point, the buy is not, once it's already made a substantial move, right? That can be very, very dangerously close to chasing. I think Frank played this from 154.817, 154.817. So I think he bought it, somewhere before the big explosive move. And you have to, when you're doing this, I think he's just trailing a stop on it. He's trailed 295 pips. So these are the kinds of moves, obviously, that Frank and I, within our style of trailing stops, this is what we live for. And sometimes you get it on the yen pairs. Sometimes the yen pairs can be very tricky. But I think Frank essentially is looking to stop out if we do break through some of these lower time frame support levels at this point. So shout out to Frank. He probably can hear us. So congrats to Frank on his trade. This is a huge runner. And again, I think to Ivan's point, if you're going to play these sorts of moves, the idea is not to do it after. Obviously, we all want to buy before it runs up like this, but trying to chase after you see it happening is a really tough game to play. So important stuff, I think, for sure, just to hear that. Again, sometimes people get caught up in the hype, chasing these sorts of moves, whereas, Frank and Ivan and myself, we've been doing this for long enough. That, what's shiny is not always, true gold, right? It could be very, very deceiving. So, Ivan, what else? Any yen pairs you're watching? So, of course, yen pairs have been on fire recently. Have you been looking at any of them?
It's a bit difficult at 35,000 feet, but other than that, well, you were the one that bought your yen the other day, and I was like, that's a good one. Congratulations on you for that. But
I bought it and I made a little bit, but it left me behind. So I got trailed out at a point. So I missed the great part. I have to be honest.
You missed the great part?
I did.
Wow.
I did, and I've been kicking myself for a week. So yeah. No, I mean, I caught some of it, but I didn't catch this. That would have been nice. This is the part that that I was looking for that I did not get. Sorry, keep going. I didn't mean to interrupt you.
Nah, what I just tried to say earlier was that you're getting paid for anticipating these runs before they happen and try to get out of those when it doesn't happen. And yes, it's a good bit of a cat and mouse game, but all in all, that's what you're getting paid for. That's what you are. That's where expertise comes in, is to try to identify what time of the year are these runs supposed to happen, or when is it not supposed to happen. And unfortunately, when they do run up like this, if you're left behind, you're just left behind, and there's nothing else you can do. But if you go back in time, this happens every year, all the time. Not all the time, but every year there's a couple of them. As you can see in 2022, there's 1, 2, 3, maybe 4 runs, and then there is 1 and at least 2 already in 2023. So there is absolutely no issue about being angry at yourself, because it's going to come back again. So you have to have the holistic one. So you missed one, okay, then you're going to catch the next one. Then you have to prepare yourself, meaning that you need to set yourself up for success before it happens. Meaning, when is the market going to do this again? Probably in August, probably in September. Okay, then how does that look like? Go back in time. And this is what I want you to do, is to have yourself mindseted, so you always look for opportunity. And when you feel like, well, this has already gone, I want to continue buying into it, you're already in a losing position, because you are not in advantage. If you want to buy high, you can buy high, but you're more than likely, in my data set, going to be punished with a stop loss. So for me right now, it's all gone. I haven't really done anything here. But am I going to look for it to continue higher? Yes, because the Bank of Japan is still bearish.
Yep. No, those are great points, Ivan. And I think just by looking at your chart there, as you mentioned, look, before, when you feel impatient, when you feel that FOMO coming into the back of your mind, you have to look at your chart. Like Ivan just said, there's many bursts. There are many moves in the market to catch. Just because you may have missed one does not mean you need to make a dumb, rash decision and hope that it keeps going, right? So Ivan also pointed out, Ivan, you're a big proponent of seasonality. We talk about it all the time as well. One thing, to your point, be cautious with Euro JPY, especially because, yes, July has been very good. There's been a nice move there. Like I said, I caught a little bit of that. I didn't catch the best part, but I still caught some of it. But look ahead and be careful. In the last 5 years, we've seen a decline in the month of August for Euro Yen. And the last 10 years, we've seen a slight decline in the month of August. So again, if you're chasing hype, you have to be cautious with that sort of thing for your future projections. If you're looking at something and you say, well, wow, this thing has gone up. Well, look ahead, be careful, and don't chase something that's moving in one direction, because again, it will stop. It will come back. It may not come back to where it started, but it may, it's very likely to have pullback somewhere along the way. Eventually it has to. So, nothing moves in one direction forever. It could do it for a long time, but not forever. Speaking of moving in one direction, Ivan, we talked about the NASDAQ a little bit as you were getting on the stream, and Frank and I talked about this. The NASDAQ has been here's a weekly chart. You could see, look how many green candles in a row. 1, 2, 3, 4, 5, 6, 7, 8 weekly candles in a row to the upside. What would you say to somebody who feels like they're missing out on NASDAQ? I've got a lot of comments, people asking me about NASDAQ. Should I be buying it? What do you think? What would you say to somebody who thinks that way, Ivan?
What does your data set say? Should you be buying in this situation? Okay, then you have to go through a lot of data on NASDAQ and see, if you buy high, do you generally win? Is it going to continue on forever? And my kind of answer there is yes and no. You are unfortunately or fortunately blessed with continuation trades on NASDAQ, and you can more than anything else continue buying when it's so high. But is that the best strategy? Probably not. And is it going to continue higher? More than likely, because what is the driver of this sudden run? It is the belief that we are going to peak interest rates, which has been the cause of why Nasdaq has not risen as more than it has. So to me, until Fed starts increasing interest rates again, or until they insinuate that, this is going to continue higher. It's very basic. It's higher interest rate, lower interest rate. Nasdaq goes opposite. So this is going to continue higher. Is it going to breach 16,000 at some point? I would believe so. It's just about patience. So any pullback.
Yep. And sometimes you have to keep it simple like that. Like you can dig deep and look at a million different economic figures, but at the end of the day, the driver right now is the Fed and where it's at. Now, I guess, Ivan, we've got to follow up with that. Gold has not seen such a impressive rally. Again, Fed projections for a softening, monetary policy has not done anything to gold yet. Do you think it will? And I guess obviously we're trying not to speculate here, but if it started to show signs of strength, would you be looking to join the move, or is there something you'd rather be trading instead? Obviously it's very so.
Yeah, I still have my triangle: bonds versus commodities versus equity. Where do you want to put your money on? And right now, 10-year T-note is 376. I still would put my money on S&P before anything else. I though it's very fun. It's a lot of fun with Nasdaq. But it's also a lot of debt there. With high interest rates, you are going to see more and more failing businesses, in particular in tech, because they have so high debt to equity ratio, on average. But to be honest, S&P 500, if it just comes down a bit more again.
Yep, and that's the thing. Sometimes people who trade gold, right? Ivan, you and I have been doing this a long time. You know, Forex traders who get into this stuff, they're fascinated with gold. It's a shiny thing to trade. I get it. I like to trade it myself too. However, what you just mentioned, exactly, the triangle, explain that to people who, gold traders, again, they're so fascinated with gold, but there's some competition there, right? You have gold, you have bonds, you have indices. What's the triangle? Tell us about that.
It's a I don't know if it's the triangle, but it's a triangle that I have. It's allocation of funds, mostly by hedge funds and pension funds. Where do you want to be? I think I believe that the rate of return that pension funds wants is around 5%. So if you only buy bonds now, you get 3.75%. That is not enough. So they have to invest somewhere else. Where else do they go? Okay, either indices / equity or commodities to get that return that they need of 5%. Now, it also comes down to risk. So if there is lower risk in the horizon, you would then go to commodities and indices. And in which of those two categories have the least amount of risk with the highest amount of return? So it's the constant evaluation analysis of where should you be mostly allocated. And this is what traders do every day or on a regular basis in terms of where is the best profit to take. And right now, indices or stocks is raising more than gold. In commodities, so that's where the allocation is right now as of we speak. But over time, you want to be adaptive to the market conditions that is out there.
Yep, beautifully said. And I think it should be a triangle. If it's not already a well-known thing, we'll call it Ivan's triangle of assets. So we'll lock that in stone. We'll write a book or something. We'll call it Ivan's triangle of assets. But yes, no, I mean, that's the thing, guys. You have to think. People oftentimes they have a very narrow focus and they think that, it's solely just the day traders that are pushing these things around. But you have to remember, you have hedge funds, pension funds, mutual funds, ginormous money managers that have to put their money to work somewhere. And that is the driving force for gold, right? You need central banks buying gold. You need funds buying gold. You need some fear about the underlying economy or some fear about future inflation. Those are things that drive that triangle to lean into gold instead of bonds and indices. Right now, indices are kind of the clear winner with the NASDAQ flying. So you have to look at the competition to gold to understand why it's not just flying high. Now, I still like it to the upside. I think that, cooling inflation or the Fed funds rate starting to peak and starting to come down could be a bullish thing, but you have to look past just the Federal Reserve. Look at other central banks, which show less immediate signs of cooling their Fed or their rates, right? Of course, the Fed is the big one, but there's also the Bank of Canada, the Bank of England, the ECB, some of them very hawkish compared to the US, which again, a bunch of gold that trades is not just US, right? Ginormous. I think it's a vast majority of the gold transaction in the world do not involve the US, right? So you have other players in this game. Whereas when you look at indices, a very key distinction is that, the US is a ginormous purchaser of US stocks, obviously. So it's two different playgrounds, I guess, to think about. So Ivan, well said. And I don't think we've really talked about that extensively on the stream. And I'm glad that you brought that up.
You're welcome.
Yeah. So Ivan, we're doing a giveaway here today. So I've got to I guess, deliver on that. We are giving away a gold VIP membership. But before we do that, first of all, if you guys would like to join, if you haven't already joined the giveaway, click the link. We're dropping it in the chat right now. If you have not joined, all you have to do to enter, we're giving a gold VIP membership away. Send a direct message here and you can join for free if you message in right now. We're about to do the giveaway spin. We'll have James come back in a moment. Before we do, Ivan, just tell us about your coaching webinars and tell us about your one-on-one coaching. I always mention it for you, but let's hear from you. What is your one-on-one coaching about? Tell us.
So it's basically an individual plan that we come up with depending on what you are struggling with, and you're working individually with what you need to have help with. And over time, it is mostly about psychology. It's mostly about how do you win over yourself? How do you become better? How do you avoid your mistakes that you really can't see what you're doing? So through Zoom meetings, I tried the best of my ability to pinpoint what you need to improve, and by the end of it, become a professional trader that not only are profitable, but you can withstand the test of time. So yeah, and then the VIP webinars, Wednesday and Friday, London Open, we go through exactly what you are struggling with in a group session. I have a topic, and then you come along and ask questions, and I answer as freely as I can.
Yep. So it is genuinely a very rare thing to find in this space, is to find somebody who has a passion for teaching. He does coaching webinars within our Discord and one-on-one sessions for people who need that extra help. And I know I've said this before, if I had something like this at my disposal when I was just getting into this would have been a game changer, and it probably would have saved me 6 months plus of my life. So if you have not already joined our VIP, that is something that's within the VIP webinar section. And of course, you can find Ivan and ask him for one-on-one coaching if that's something you're interested in. Ivan, we're going to do our giveaway here. So I'll thank you for coming on. Before you go, you guys can also find Ivan's channel. Here it is. Click that to subscribe. And of course, if you guys are not inside of the Discord, you'll be able to find Ivan, and make sure to DM him and say hello if you enjoyed his commentary today. Ivan, thank you for coming on the show.
Thank you very much for having me.
Yep. All right. And now we've got to bring in James. He's going to be doing our giveaway spin for everyone who joined. We can say hello to James. Hey, James.
Hey, yep. So I have got the wheel right here. Lots of you submitted your name, and I was just picking them out at random as quick as I could. So here's what we have. I have first names, last initials. So hopefully if you are still watching and you know that you submitted into the giveaway, your name might be up here. I'm going to spin this wheel in just a second. And then if you are still here and watching, send us another message with that same link. Let us know that, hey, I'm the one that won. We've got your name here, so we'll be able to verify that. If you are not still watching, we will look for you and try and find you and get you your access. But hopefully you are still here. And I'm going to go ahead and spin this right now. Nice little spin on the wheel. Again, I have the first name and the last initial of people who submitted. And our winner is right here. Let's see. It was this one right here. Lutrim P. That's Leutrim P. Lutrim P, I believe is how you pronounce that. You are the winner. Congratulations on getting the free access to our gold VIP Discord. Lutrim P, again, Leutrim P. I apologize if I'm mispronouncing your name. I'm sure I am, but Lutrim P, you are the winner. So message us with that same link that you used, Chandler. If we could get that link in the chat one more time. If you send us a message with that link letting us know that you are today's big winner, we will get you hooked up with your access. If not, we will look out for your previous chat and try and get you access through there. But yeah, Lutrim P, congratulations. And thank you to everybody who submitted your name into the giveaway. You know, we like to do these on occasion, not every stream, but every once in a while we do giveaways for fun because we really love and appreciate our audience. So if you didn't win today, keep watching streams, and hopefully one of these days we will be able to get you. You'll be the big winner for one of our giveaways.
Yep. Thank you, James. And with that said, guys, I also do want to say, if you did not win today, but you would like to join in on some of the action that we were talking about, again, a big shout out to James and the team for allowing us to do those giveaways. It's a lot easier on me to be able to just do the show and do the hosting stuff, and for them to set us up. So big shout out and thank you to the team for doing that giveaway. We do genuinely appreciate our audience a ton. We're only able to do these shows every day because of you guys, because of our sponsors. And I do also want to say that if you did not win today's giveaway, but you would still like to join our VIP, you can get access to all of our trade alerts. You get access to our coaching webinars with Ivan, who you just listened to. You get our chat room access, and you'll see a ton of subscribers that are on the channel that are in our community. If you guys would like to join the VIP, we are currently doing 55% off any of our memberships. If you'd like to try us out for a month, get more than half off. If you'd like to join us for a year, get more than half off. And if you want to join us for the one-time price at more than half off, all you have to do right now is message us right now. So right here, we're going to pop it up on the screen here, and you can see there it is. 55% off. If you'd like a chance to get that massive discount price, if you didn't win today's giveaway, here's a way to still get in on the action for a massive discount. 55% off. You just message us on our direct message center. Click this link, and I'll show you what that looks like, and so that you know what to do once you click that link. So click that link. It's going to look like this. It's going to pop up a chat support system, and all you do is click chat now. Click 50% off. And for those of you guys who message in right now, you're going to get an extra 5% more discounted off of your membership. You get access again to all the trades I share, to Ivan's coaching webinars, all of Frank's trades. I do options trading, swing trading. Frank does swing trading on currency pairs. He does stock trading, and we share all of our action inside of the group. So come join us inside of the group. Again, 55% off if you message right now. And I hope to meet some of you guys in the Discord. Thank you guys for tuning in today's live show. I hope you have a great rest of your day, and we will see you back tomorrow. What's up?
Dude, what happened to you?
Haven't you heard? It's the summer half off discount sale.
Oh, that's right. I forgot.
Right now only, get half off any of our VIP Discord memberships. These memberships include access to our signals, where you can get entries and exits from Frank and I, and full breakdown and analysis with each trade. You can learn our strategies in detail. You can learn how to get funded with our training material to help traders looking for funding. And you can also join the chat room community. We have several membership opportunities, so click the link and check them out for yourself. And remember, you get half off if you either message us or use the discount code you see on the screen now.